I'm Eddie Cannell.
And I'm Tom Cannell.
Hello, everyone. This is the Mortgage Brothers Team episode. Tom, what is it?
Boy, 22. Kapow. Kabingo. 22.
22. I forgot. I was like, what episode is it?
Yeah. Do we still have some listeners?
Yeah. Hey, yeah, I think so. If we listen hard enough, we can hear them.
Okay. All right.
Yeah. The program today, Tom, where we're going to try to do program highlights on our channel. So whether it's YouTube or the podcast, we're going to have any listeners be able to actually follow the programs, learn about them, and we're going to highlight today the VA loan for home purchases.
VA loans for our vets. So we want to thank them, number one, for their service, all those past and all those that will serve in the future. So thank you for what you do for our country.
That's right. In fact, I just heard a story. It was a friend of ours. The obituary came out today, and he one of the things he always used to say, he was an immigrant, and whenever someone would thank him for his service, he used to say, "I was just thankful I could serve." I mean, like,
wow,
the guy was thankful,
yeah,
that he could serve, which is awesome. So, thank you to all the veterans.
Yeah, awesome.
And so let's just talk about how you get approved. I'm going to go through. I think the idea is when I have a customer, a veteran who calls me and is looking to get approved, what do we need? How does that conversation go? How do we go through that loan process, the loan application process, and into?
Well, I actually had a borrower yesterday call me because you and I were talking about what podcast we were going to do, and we talked about the VA loan. And literally within 2 hours, we got a call from a VA borrower, first-time home buyer. I don't know exactly what service he has. We're still digging up his certificate of eligibility, but his big question was how does it work? Like, what do I do?
Right.
So what's next? So maybe we can kind of approach it as if we're talking to let's just call him Tim, as if we're talking to Tim. So what does Tim need to do?
Yeah. Okay. So Tim wants to find out if he has. The question will be: have you actually accessed your certificate of eligibility? You have to go on to the VA site, and there's a portal that you go onto. And of course, if you're a veteran, you're probably used to this portal, accessing any of your benefits or anything like that. But basically, if you just Google certificate of eligibility VA, you'll find it.
You'll find it.
You'll find it. Now,
some of our borrowers, we work with them young, medium, old, generations, and sometimes people can't find it. So we can help. We typically ask for what they call as a DD 214. And a couple other small little bits of information. So if you can't find it, or you're even like, what is a certificate of eligibility? Don't worry, we can help you with that.
That's right.
But that's one of the first things we'll probably ask for.
So the certificate of eligibility will have these. They're called entitlement. There's an entitlement number in there. It's so confusing. I would say for veterans, don't worry about figuring out what that certificate of eligibility says so far. As those numbers won't make a lot of sense to you. Just forward that on to us or your lender, right? Because we're going to look at it. Right. What we're really looking for on that certificate of eligibility is whether or not you have an exemption from the funding fee. Because we could go into that a little bit. We could segue into that right now, but a funding fee is very similar to upfront mortgage insurance, but the Veterans Department just calls it a funding fee. If you're not disabled, according to the VA department, you will pay a funding fee, and then that funding fee will vary. And so I'll explain to the borrower, I'll ask him, are you disabled? And he'll say yes or no. Most veterans will know if they are exempt from the funding fee. Mm-hmm. I would say 90% of them know that. Mm-hmm. Others don't. So, especially the first time homeowners for veterans, they might not know. But if they've already gone through the paperwork with the Veterans Association for the disability, mm-hmm. Most of these guys know.
No. Okay. So the example we're using, Tim, he does not know.
Okay.
So that is going to be part of the process. He is partially disabled, but we don't know if the VA is going to recognize him disabled enough to be exempt of that funding fee. So yeah, the funding fee is going to be a big part of that certificate of eligibility. Also, if you've used the VA loan before, just talking through and figuring out if there's been any charge-offs. Have you used any of your entitlement that's not recoverable? If you have, that still might not be a problem. You just may not have full entitlement, which the typical person probably doesn't need full entitlement to buy their homes. Most of these homes are going to be first-time home buyers, and full entitlement is not necessary. It obviously helps, but when we look at the certificate of eligibility, there's two things. There's the funding fee, Ed, as you talked about, but also, has it been used? Has there been a charge-off? Has there been a foreclosure?
Right.
So that's the certificate.
That's right. And then on our website, so azmortgagebrothers.com, under loan programs, everyone can actually find the page called VA Loans. It's a really good web page that highlights the program details. It also shows the funding fee schedule. So we'll probably put that in the YouTube if we can. But for example, the funding fee purchase schedule for first-time use is going to be 2.15% if you're putting less than 5% down. Okay, and again, I think so that most veterans who buy a home are going to actually go with zero down. Most of them do.
Yeah, most of them would. Yeah,
because the interest rate's the same. There's no extra cost. It's great. The VA loan is, the best loan. I would say there's only very few instances when it's not the right option. Mm-hmm. But that on our website, it has the whole schedule of the funding fees, so you can learn about those and what those percentages are.
And I just want to throw that out there, or throw this out there. The reason for the funding fee is basically the funding fee gets pulled with other veterans' funding fees, and that acts as an insurance bank. That if for some reason one of the loans that has 0% down, if one of the loans do default, that the VA can be made whole again. So one of the primary purposes of that funding fee, Ed, correct me if you think there's another purpose, but one of the big ones is to help insure these loans so that veterans don't have to come out of pocket for a down payment.
Yeah, that's absolutely right. The VA guarantee. See, the VA actually has a guarantee to the bank. The bank funds the mortgage, and the VA guarantees that veteran, whether they pay that mortgage or not, the bank will be made whole. Mm-hmm. So that funding fee goes to pay. It goes into a pool to pay for that. So it's insurance.
Mm-hmm. Okay. So Tim called. We've talked about the certificate of eligibility. We've talked about the funding fee. We've figured out if he's used it or not. And there's lots of little nuances we won't get into. But what's kind of next?
Okay.
How about purchase price? What is he limited?
Yeah. So I'll tell a veteran in Maricopa County today, you can go zero down, up to $484,350 loan. Okay, so if you wanted to buy a $600,000 house, you can, but there's a down payment required. You can't go zero down once you start going above 484. Okay, mm-hmm. So so I'll ask them what's your price range. If it's below 484, well, you can go up to zero. In most cases, zero down. That's according to the entitlement that's on the certificate of eligibility. But the point is, we'll discuss that. But it's very similar to a normal application. I mean, I'm asking the borrower for their names, socials, date of birth, where they've lived and worked for the last 2 years. I need 2-year history, who they currently bank with. Now, for assets like where they bank, veterans do not need reserves. I mean, it's very little reserves are needed, and sometimes no reserves are needed. I'll ask them if a veteran has very little funds in the bank. I mean, literally, let's just say $500. It's possible to do that mortgage because they can have the seller kick in 4% of the sales price towards closing costs and prepaids, which will basically cover all their closing costs and prepaids, at 4% in most cases, and put zero down. So someone with just $500, a veteran, can purchase a home. So when I'm going through the application, unlike a conventional loan or an FHA, I am not too concerned if a borrower has, little money saved.
And to go one step further, if we run a kind of an underwrite on the borrower, and there are a couple of debts that need to be paid off. One of the unique things about the VA loan is you can actually use a seller credit to pay off a small credit card, which is unlike FHA and unlike conventional.
Yeah, that's really cool.
So it's unbelievable. Actually, we've gotten a couple borrowers approved that way. Their DTI is just a little over, but because of the seller credit that can be issued, that can help pay off that debt. Very rare and can be very useful. All right. How about mortgage insurance? Is there mortgage insurance like FHA?
There's no mortgage insurance. That's the best part. One of the best parts.
Wow.
Okay.
That's awesome.
So there's no mortgage insurance, and the interest rates on VA are fantastic. I mean, they're about 0.5% lower than conventional financing.
Mm-hmm.
So I don't care if, and another thing about VA loans is if you have a 660 credit score, that's okay. Your rate's going to be a lot better than someone with an 800 score getting a conventional loan with 25% down.
Mm-hmm.
The rate will be better.
How about, is it bad to think about joining the military just to get a VA loan? I thought about that. I wonder how long I'd have to serve.
Right.
But anyway, okay. How about 1%? What are you going to say?
You know what? On the website, it does actually show a whole schedule of what it takes to be eligible for a VA loan. So the fact that you mentioned that's funny because on that page, it'll tell you for veterans whether you're, if you were active duty, if you were in reserves. Like if you're in the National Guard and reserves, you need to have been in the reserves or National Guard for 6 years to be eligible for the VA loan. But if you have active duty, wartime versus non-wartime, all that matters. And there's a whole schedule on that page under azmortgagebrothers.com under loan programs for the VA loan.
Yeah, good. Okay, so one of the things that we get calls about is, what is the veteran allowed to pay for, not allowed to pay for? What does the seller have to pay for? How can we kind of boil that down simply for the borrowers?
There were a lot of old rules that said the veteran couldn't pay for some fees, but today, veteran basically can pay for, really everything. The one thing now this is important. The lender cannot be charging more than 1 point. Okay, one point. If there's 1 point in origination charges, then there are certain things that the veteran cannot pay for.
Mm-hmm.
And for example, if let's take a $200,000 loan. If I'm a lender and I'm charging $2,000 more or $2,000 in origination charges, then the veterans basically cannot pay the escrow fee, cannot pay the lender fee. Okay, so which all of a sudden that just kicks in.
Mm-hmm. So basically, to put it in other terms, lender fees can't be more than 1%. We talk about it being points. We rarely charge points on any loan ever. So it's when you look at the underwriting fee, the escrow fee, and you add up some of the other lender fees that aren't points, but they're just fees to the loan. That will always be capped at 1% for the borrower.
Right. They have to be capped.
Okay, good. How about termite? Do they need a termite, or can they?
Good point.
Can they skip on that?
When you're buying a home on a VA loan, you have to get a termite. Most people do get termites. Termite reports.
Termites not allowed in the VA home.
Right. So you need a termite report, and the buyer can pay for it in Arizona.
Okay. Yeah, good. All right, what else?
I would just say that in the VA loan, there are the VA appraisal. Once we actually start the loan, it's a very normal process. One of the unique things is the appraisal. Appraisal's ordered through the VA department.
Yeah, good point.
There's a different pool of appraisers that go out there. And I believe all the appraisers are veterans on the list. I believe that's one of the requirements. But VA's had a bad rap, for years for being real tough, having tough appraisers, who are difficult. They go into a property and they'll kind of rip apart,
pick it apart. What's that
apart,
ceiling stain? What's that chipping paint for?
Yeah.
Fix this, fix that.
Yeah. And really that is something that really was a part of, in the past, that was the case. It's very rare to have issues today. The appraisals being done today are very similar to FHA and conventional. They're just looking for health and safety issues.
Mm-hmm.
Okay, for the most part. So I don't want people worried about the VA loan. It's a good loan. We can close these loans in really 30 days is not an issue. It's very standard. I want sellers comfortable with the VA borrowers who are making applications or contracts, offering contracts on their properties.
Mm-hmm.
It's a good loan. It's really not difficult,
right,
and has a ton of flexibility.
Okay.
And allows high debt ratios. So the point is, once we start the loan, we can finish these things in 30 days. It's really not a problem.
So I've been thinking about this. Why would a veteran not use a VA loan if he's eligible for it? And I think it could be boiled down into this, that basically if you're going to be in the home for less than 3 years, less than 2 years, and you've got great credit score, the conventional loan might compete with that, with the VA loan, but it'd be only under that exception that you're in the home for a short period of time. You might not want to pay that funding fee, move over to a conventional loan, which will still have a great interest rate because you've got a good credit score. But other than that, the VA loan's an awesome loan.
Yeah.
Hard to beat.
Definitely. So anyone has questions on the VA loan, is interested, or needs anything, let us know. And everyone, if you're watching from YouTube, be sure to just subscribe. We'd love that. And if you are listening on your podcast player, be sure to like and subscribe on there as well.
Sweet.
Tom, I think we're done.
I think we're done.
Time to go home.
All right, it's cuddle day.
See you, everyone.
Thanks, folks.
Hey guys, thanks for listening to the Mortgage Brothers Show. Please let us know if you have any questions you'd like us to answer on this podcast. You can email your questions to tom@azmortgagebrothers.com or yours truly at eddie@azmortgagebrothers.com. And be sure to ask us for a free quote on your next mortgage. Tom and I will personally work with you and help you through the whole process. Signature Home Loans, LLC does not provide tax, legal, or accounting advice. This material has been prepared for informational purposes only. You should consult your own tax, legal, and accounting advisors before engaging in any transaction. Signature Home Loans, NMLS 1007154, NMLS number 210917 and 1618695, Equal Housing Lender.